Hey everyone, welcome to the KE Report and another daily editorial, this time chatting with Joel Elconin, co-host of the PreMarket Prep Show. Also, check out the PreMarket Prep website where you can follow along with Joel and his partners over at PreMarket Prep to hear what's moving markets, individual company, stock-wise, as well as broad averages. And Joel, we need to start off with what was going on Friday. Friday was just a crazy volatile day to end the week or to end the month of February. There was in the S&P about a 120 point spread from low to high, and markets closed pretty much at their high. Today's a different story as the markets are continuing. I think we can call it this downtrend really over the last about 2 weeks now. But Joel, any insights from a charting perspective on what was going on Friday?
Good afternoon, gentlemen, and what a treat for your listening audience to get to hear me rant on a Monday instead of over the weekend. Boy, oh boy, Freaky Friday, as Shad said. We've talked about the propensity of the market to make a low or high for the week on Friday. If you go back and look at that, well, we made a low for the week. We made a definite low, and then the rally got going. I don't know what, geopolitical things were going on, but the rally had a head of steam, and then the imbalances for the close, which are disseminated a little bit earlier on big expirations. So around 2 o'clock, those buy imbalances just got out there, and they started getting bigger and bigger and bigger and bigger. And you get, the front runners, whether it's institutions, front running institutions, it's high frequency traders, algorithmic traders, they got out ahead of it. And you had just one explosive rally just based on the order imbalances. Now, history says that a lot of times when you have those distorted moves that are not on fundamental news, that a lot of times they give it back. And boy, it's giving it back. It gave it back, not so much in the pre-market, but it gave it back during the day. And it is just a very, very volatile, uncertain environment. I think you have very nervous investors out there.
Well, Joel, I know you follow the tech sector closely, and if we look at the Nasdaq, normally we talk S&P 500 with you, but if you look at the Nasdaq, it's got a lot of the tech names in it. It's kind of been brutal the last couple of weeks. What are you looking at as far as technicals for support or resistance on the Nasdaq?
If you want me to go to the triple Qs here, I could go to Nvidia, whatever floats your fancy. But I mean, you're looking at a critical level here in as far as the triple Qs go. You made a new low for the year on Friday, right? And you rebounded with a lot of strength, and you're giving it back today. So just under 500 in the triple Qs. Friday's low was 496.93. I'm also looking at a quad bottom in that area back from mid to late November. So, hey, if it's just a trading range market, buy the dip in the triple Qs, tech will lead us to the promised land, then this $497 to $500 area needs to hold for the triple Qs. If you want to go more stock specific and talk about everyone's darling, it's talked about more than anything else, Nvidia. Now, Nvidia, very volatile, getting killed today, whatever reasons you want to attribute that to. But if I told you since October of 24 that a vast majority of the trading range has been between 120 and 140, well, it's gone 120, up and down, up and down. That's a long time. That's a long consolidation period, right? So what happens with consolidation periods? They're resolved one way to another. So now everyone's looking at the deep seek low in Nvidia getting hit today for whatever reason. That deep seek low at 113.01, you bounced off 114.51 today. I don't know what to make of all this news with Trump investing $100 billion in Taiwan Semiconductor. All I know is Taiwan Semiconductors investors are not too happy about it because TSM is down over $4. But very important, just like the triple Qs are down at the the trading range for the last year and also November. It's very important for Nvidia to find a base here at this 113, 114 area and then go back up to the top of the range. If not, for Nvidia, whatever you want to talk about, 100, double digits, who knows where the market momentum will take it. I will tell you that the earnings report was good, but they are not going to be growing at the same rate that they did over the last couple of years. It's impossible for the company to expand at the rate that it did. It's given itself a valuation like it can, but it's impossible for it to do that.
Joel, what's this telling you about market leadership then? We've talked about this over the last few months, actually, how tech has lost the market leadership role. You were telling us off mic about some of the sectors that are up today and are doing well recently. And look, they're defensive sectors. So has the market truly switched, or is this just a short-term adjustment?
Well, for right now, I mean, I would say, the jury is still not out, but I mean, you got Berkshire Hathaway making a new all-time high today. You have some of your insurance stocks making new all-time highs. You got a bid in the TLT, your XLF, your financial sector ETF, that made a new all-time high yesterday. So, whether it's a trend that's going to last another month, 2 months, 3 months, 6 months, a year, the market is hunting for safety. And that's where it's going to. It's going to the value chain. It's going to companies that make money and keep their money and don't spend their money wildly.
Yeah, Joel, it does seem like a rotation out of some of the growth names into some of the value names. All those sectors you just named are kind of the safe haven sectors. Now, for a while, the Magnificent Seven were seen as that safe haven. Let's look at another one of the big ones, Tesla. I mean, if you look at it, it's not been a pretty picture. I know your partner, Dennis, follows this very closely. Any thoughts on Tesla?
Political? No. For the
Technical.
Technical? Oh boy, this is such a polarizing stock. He's not making any friends in Canada, and he's not making any friends in Europe. So one thing, when you're the head of a major company, your customers are both Democrat and Republican, liberal or conservative. There is a lot of Democrats out there that don't want to buy a Tesla. And he was originally. So what he's doing with his Doge efforts and the things that he's doing is really hurting the company. And he doesn't really seem to care. He's a very rich man. So, I mean, you're mixing politics with your business. That's a recipe for disaster. He's coming up with a lot of promises about FSD. He's put a timetable on that. One thing you can say about Musk is that he's made some outrageous bold claims or, promises over the years. And a lot of time they've come true, but just not on the time frame that he originally gave. So if you're still a believer in robo-taxis, if you're still a believer in I know you guys want robots in your house, and it's definitely going to something you're going to budget yourself for. Then you stick with it. The ups and downs in the stock, but it's out of favor right now. I'll tell you one thing. Another concerning thing is it got a vote of confidence today from a very well-respected Wall Street analyst, and that thing has gone from major green to in the red. So when you have a stocks going down on bad news, of course, you can attribute some of the price action overall in the S&P into it. But right now, there's just a lot of negative catalysts out there, declining auto sales, more negative catalysts than positive. And as of right now, you still have people sitting on a lot of profits, not so much from this year, but from last year. And let's see if we can find some stability. But just out of favor with people that are buying the cars, out of favor with a big part of the population, out of favor in Europe, certainly out of favor in Canada. So he's definitely doing damage to his brand.
Oh boy, is he ever. And the sales data has just been brutal for Tesla too. But hey, I know that stock doesn't always trade off of how many cars they're selling, which is kind of crazy since it's a car company. As you said, it's still up from its lows last year, but well off of its highs of just 2 months ago. Joel, what does this market mean to you then? Make sense of it all. Is this a market where we just need to go hide under a rock for maybe a couple months, maybe through summer, and poke our head out a little bit later to see what, if there are any trends that have emerged?
Well, the best case scenario is that you're in a trading range and that right now you're at the bottom of the trading range and that we're going to pop back up and everything's going to be la, la, la. I would like to be in that camp, but I'm not. And like you could talk to me tomorrow after, right, the big deadline, like on the tariffs. I mean, if he backs off on the tariffs and he decides to wait another month, another 2 months, another 6 months, then this market's going to rip higher. I don't know if you're going to get back to all-time highs, but you can't play with the emotions of the market with economic and geopolitical policy. It doesn't happen. Look at Bitcoin. Bitcoin's in the dump, goes back down to 80K, and then what happens over the weekend? Lo and behold, he's going to be adding, currency reserves of cryptocurrencies. The thing popped up to 95,000. I'm talking the futures here, almost 96,000. It was up $9,000. It's up $3,000 now. This is a sell the rip market until otherwise notified. You can buy the dip at your own discretion, but if you're buying the dip, man, you got to be very proactive in selling the rip because they're not holding. The gains, a lot of the stocks that came out with good earnings didn't hold their gains, and a lot of the stocks that came out with bad earnings got pounded.
Joel, you bring up an interesting point about selling the rip versus buying the dip. The market has been conditioned for, I don't know, maybe 14, 15 years to always buy the dip. Is there ever a moment where it actually is going to change longer term structurally to a sell the rip market?
It kind of feels like it's changing right now to me. I mean, people are so conditioned. I mean, look at the market. I mean, just let you put this perspective in a longer term perspective. Pull up an S&P chart. Pull up a long term chart in the SPY since COVID. Okay? Oh boy, we just got some more bad news in the market. Is this even a correction? Is this anything from the COVID low? I mean, this is nothing. The COVID low was 218.26. You just hit 613 and you're trading at 588. Nothing. This is nothing. This is not even a correction. This is nothing. So before you start buying the dip, then you better look at where things are at on a historical perspective. Wow, we are really getting killed right now. Are you guys seeing any news out there? Holy mackerel.
But Joel, like you were just saying there, that is the key here, is that this market isn't even down 10% from the recent highs. So we haven't even had a 10% correction since mid last year. So again, corrections are natural, even in bull markets, but if it's a change in tenor, that takes time to know that. So look, how do you piece that all together, right? We're making a big deal out of some weakness in the market, which there is weakness in the market, but we don't know how this is going to play out. So are we making too big of a deal about this?
Of the sell-off?
Yeah, the sell-off, saying that this could be the end, that buy the dip is dead, all these different terms.
No, you're not making too big of a deal out of it because we haven't even had this is like nothing. This is a nothing. This is not even a correction. This is not, if you are really looking, I don't know. I mean, I'm looking at the market right now. I'm seeing the trading action that's going on. I think this market has a lot more downside than long side until further notice.
What will you be looking for that would change your opinion that the rally's back on? Is there certain moving averages you want to get ahead of? Is there certain price targets you'd want to get ahead of? What would change the momentum back to where you feel like the market is in a growth mode?
Nothing.
Nothing. Hey, so you are a bear right now. Joel is officially a bear for these markets.
Yes.
Okay. Well, Joel, we'll follow up with you next week on this. I can understand the worries that are out there for these markets, and it's not just for markets, it's for how countries are relating to each other. All these other really politics that are playing into this, and also the fact that these markets have run so much. But we'll get to follow up with you next week to see just how much this plays out. And as I said, this will be more of a long-term thing. If we have truly gone bearish and sell and buy the dip is dead, then you know what? We'll be able to say that in certainty over the next couple months and throughout the rest of this year. But this definitely gives us something to follow up on next Monday. So Joel, great chatting with you. And again, everybody, you want to follow along with Joel, check out that pre-market prep show link in the show notes. Joel, always entertaining chatting.